All right. Good morning, everybody. Good morning. Good morning. Need a sound check, please. And I'm going to go ahead and start in the live trading room as well. Good morning, everybody. Let me get a sound check, please. All right. Thank you. Thank you. I got the rig set up a little bit different today, so needed to make sure that everything was good to go. So good morning, everybody. It's Wednesday. It is the 12th, 2 days before Valentine's. If you haven't got something yet for your significant other, quit screwing around. Go get it done. Don't be that person who waits until the last moment and then all the good stuff is gone and you end up bringing them home something out of the bubblegum machine. Futures are still looking good. We had a nice run through the overnight. Everything on the checklist points to the opportunity for a trend day. I would still be a little bit cautious of this market wanting to pull back for the gap fill. We know it won't more than likely make a gap fill. It's too big of a gap. But if you go back and you look at the way futures manage the gap when it's moved this far, a lot of times you'll see them pull back at the open halfway or so, quarter of a way to the Globex open. It doesn't always happen. That's not always the case, right? There's never always anything in the market. Trading the open is something I really enjoy doing when it comes to futures. When it's other products, not so much. Like yesterday morning, I traded this looking for it to close the gap, and it didn't, but it was still a good trade opportunity. Today, the S&P is up almost 0.5%, so don't think we're going to see that. Market is looking really strong this morning. A couple of products with earnings. There was discussion on AMD, which has just been a beast. This really screams out to me the island reversal. Swing Trade Bot has a great description. They've named it the Gilligan's Island. And then they have exact trade criteria, where to put your stop, everything, the whole package. So quick commercial, since I'm still 5 minutes early. If you are new to the Bullish Bears, for you people over there on YouTube, we got a 14-day trial. It's free. You can't beat free, right? Come by, sign up, come and hang out in the chat room. Live streams happen twice a day. There is content in the hard drives. It's called a room drive. So checklists and indicators and journal templates, all kinds of great material. And then on the website itself, we've got a lot of great introductory material for people who are on the trial. And then if you become a member, we've got next level educational content. We also call out trades off and on. It's not something that we focus on exclusively, but we do call out enough trades to more than pay for your subscription. Yeah, Brew, that was me when I looked at Swing Trade Bot and I realized it was around 160 a year. There, that pretty much ended the discussion for me. I mean, well worth it. I didn't have to learn how to code anything or build any kind of scanners. They had everything already done, and all I needed to do was uh, tell it, what kind of volume I was looking for, or perhaps eliminate things that were in a price range that I didn't want to trade. So I was really impressed. Plus, it's not proprietary black box stuff. A lot of places they don't want to let you in on what they're doing, and over there, they not only tell you, what they're doing, but where they got it from, so that you can go and follow up with it on your own. I just really liked it over there, and it pushes to the mobile phone too, which I thought was nice. Jerome Powell will be back up on the heel today. I listened to a lot of it yesterday, and if you listen in between the lines, a lot of what he says pretty much sounds like, I can't believe that you're in control and I have to spoon feed you this stuff like you're a child. It's kind of interesting listening to his responses to the select committee members. He does get his jab in now and then. We got the EIA today, so that will be USO for me. It's what I like to trade when it comes to oil. I don't trade oil futures, but we have the ETF. And there is times that will pair with X steel, if for those of you who like pairs trade. All right. I did give an update on the trade that I took last night. I got in the ES at 33.58. Got out this morning before the live stream with 50 something ticks. Of course, I'd already gotten risk out. That was risking 6 ticks. So the idea that we can make a pretty decent trade without a lot of risk is kind of the point of that. It's one of those no-lose overnight swings. You get price far enough away, you get in and you put a stop between you and price, and you go to bed and you don't have to worry about anything. Jigsaw had an update yesterday. They now have a news service built in that you can subscribe for. I got the middle service. Still got to dial that in today, but it does upgrades and downgrades and analyst recommendations, and then it just does a lot. The upgrade and downgrades are something that I was interested in. I'll happily pay $8 a month to have everything dialed in nice and neat. One thing about the subscription that I liked is it was reaching out to a lot of places that you on your own would need to get a subscription to, like Seeking Alpha and all those other places. So if you have Jigsaw, you got to go to the website to get the update, and then you will see it. It also has economic calendar built in now. That was a nice update. For us today on the economic calendar, 10 o'clock is really the one to focus on. The auction, not so much. We are on the backside of earnings for most of the Dow 30. For those of you that are newer and having a hard time finding a trade, that is a great place to focus. if you haven't yet watched it, I did a video a while back on the introduction to futures, kind of talked about even if you don't trade futures, why you would want to understand futures, especially the ES. It's the S&P drives order flow in the marketplace. So if you're trading Apple or Amazon or Facebook or Google or anything, really, keeping an eye on where the S&P is, how it's moving, what it's doing, that'll help you in your trading. We talk about not staring at the one single thing that you're trading, but instead looking at something else while you're trading whatever it is that you're trading. Especially as a day trader. Check the Bullish Bears website real quick. See what is on the gap list. I do believe Dan had already posted that list. Of course he did. So if you got Twitter, which I absolutely recommend that you get it, not that you have to go out and actually participate in Twitter. There is the free Bullish Bears Twitter, and then there is the members only Twitter. On the free Twitter, which I believe is Dan that most often posts on this one, it's at BullishBRS. He'll post the morning gaps and all kinds of content through the day. So on his list, we got Riot, Shop, HMY, AIM, if you are a full member, reach out to one of the owners and prove that you are a member, and they will give you access to the members only Twitter. I do have access to that Twitter, but you got to verify with your email. That's outside of my wheelhouse. I don't have the access to accounts, so I don't know who is who. So you have to send that to Dan or Lucian. Speaking of Lucian, him and I are still working on the next level content for futures. So we'll be building out the futures tab the same way that we built out the options tab. So that when you go into the next level trading library, you see the options. This is what we worked on last year, building this out. It is going to look like that over here, including that trade that I just took, the overnight trade where there was absolutely no risk of me losing money. That's the best way to get into a trade before you go to bed, so you sleep like a baby, knowing full well that you're either going to wake up with scratch or you're going to wake up in profits. And then we'll also be putting in the drills. If you day trade, these drills are absolutely, hands down, going to change your life. It doesn't matter what you trade, options, shares, futures contracts, options on futures, those drills are invaluable. And the idea that a prop firm would hire somebody who's never traded in their lives and pay them to do those drills to teach them how to trade, and you can do it, you've got access to the same thing. All you need is a paper account and a dome. For those of you who don't know what a dome is, that's the active trader, depth of market, DOM. Got a shout out on TEVA. Nice push into the quarter, soft rejection. It looks like it's finally going to pull a Lucian, right? It's going to come up and close that gap, maybe, eventually. Finally, I can still hear him in my mind every time I see anything with a gap on it. That a market has to eventually fill its gap. It's what it wants to do. Keep track of the angular resistance in this. If you use your linear regression tool, I'm on a weekly, keep in mind. Yeah, that didn't do much good on the weekly. Let's go back to a daily and see how that linear regression shapes up from here. It's way overextended past the mean. And remember though, when it comes to linear regression, the start and the stop matters. So if I was to just do the same thing, say from this impulse up right there, you see it's completely different. Same with the indicator. Thinkorswim does have linear regression as an indicator, but it doesn't just matter if you're on a daily chart. It matters how many days on that daily chart. Me personally, I'd like to see this pull back if I was going to take a trade in it. You can't miss that perfect, clean, stair-stepping action right there. Be aware that if you're going to trade that with options, if it has options, yeah, it has options. These options, look at the implied volatility in that, 143. This is not first-tiered Greeks. They're second-tiered Greeks because of earnings, and this is going to get vol crushed today. So your options are going to be losing value because of the crush in implied volatility. Doesn't mean that you can't make money. It just means that if you trade with an understanding of how a crush in implied volatility will affect your trade, you could actually build your trade so that it makes money when volatility goes down, even while it makes money moving in the direction that you wanted it to go. So keep that in mind. This is cheap enough, though, that you don't need options. Need and want. Need and want. DTSS. Yeah. What else you got? TRXC. That's beautiful. But it's all good, Adam. Even if I don't trade that stuff, doesn't mean that other people can't or won't or don't. It's all good. At least you're sharing, throwing it out there, get their attention. So over the weekend, I had people asking me last week about trade setups, right? And we keep talking all the time about if you focus on one setup, you could just make your day every day. And that one setup would get you profits, and then you could just stop because you have profits, your day done, and you could go and learn a new setup while that one is making you money every day. And I was getting a lot of feedback from people saying, "Well, yeah, but I don't have a setup. I need a place to start." And since on Friday we were also talking about the failed flags, right? when it comes to those times and we're looking at a pullback after a market has been trending, and then we got to ask the question or answer the question, is that a pullback or is it a change in market sentiment? And so I went ahead and I did a video Sunday talking about basing patterns, and one pattern that is very common, you find it on all time frames, you find it all the time everywhere. Here's a great example on UNH. So you had a market that was nice, clean, strong trend to the downside. It set a low, and we wouldn't have known it was a low to begin with, right? Because we have to let it pull back and work itself out. So it sets a low, it ranges in a basing pattern, meaning just consolidating without breaking to new lows. And you can see it wicked lower, but it didn't make new lows, right? It didn't close lower, didn't set lower lows. It wicked. And after it built that base, it then began to work its way back up. And this is a reciprocating pattern. You want to see, don't let the big word make you not want to trade it. You're just wanting to see the same move back up. That's reciprocating. You just want to see the same size move back in the other direction, so that you already have a target in mind because you're taking it back to where you came from, right? So when you identify the strong trend to the downside, you mark the base, you let the base work itself out, and then you're looking for an entry to go long. It's a very simple, very basic trade setup, but that's the best thing about it. It's not complex. It's not, you don't need advanced level trading knowledge to get this. You don't need anything to tell you that something is trending. You've got lower lows and lower highs. Directionally speaking, you can ID it at a glance. You can see, yeah, it's trending. Well, the trend ended, and you're looking for a resolution of that. You get your entry and you trade it back to the top. Very simple, very complex or uncomplex trade strategy that anybody can learn and develop trade strategy for. Now, this is just the bones of it, just being able to recognize this pattern and then get your entry and then get your target back up to the previous levels. Short, simple, sweet, easy. That is the trade that I took last night in the futures on the ES. There is the bell. So you can see that last night we had the trend down. The market opened, it set the low. It resolved itself, and then it broke back up to the same level. No, but you can develop a trade strategy that'll go either direction, right? Because nobody knows what the future's got for us. We can anticipate trade opportunities to a point, but you basically just have to pull the trigger and have a game plan in mind for if it doesn't do what you expect it to do. No divergence this morning. The money is moving in and the issues are moving up. So when you look at the S&P 100, 80% of the S&P is moving up, and the money flow is, well, I was going to say 2 to 1, but that's not even in a million yet. So it's just overly stacked to the upside. So, Carol, when it comes to trading, so many people look for this absolute, right? Like, I seen this one thing, this tells me that I'm guaranteed that this is what's going to happen. And instead, if you focus on reoccurring patterns, and then you develop a probability matrix. Say you're on a 10-minute, for an example, with that particular question, the double bottom on a 10-minute in a futures market, how often does that create the V? How often does it double bottom or triple bottom? What would be my trigger, right? And that way, what you could do is develop a trade that focuses on one bottom, right? The V. And then what would be your determining factor to say that V has failed and you would be anticipating a double bottom instead of a V? What would be the determining factor for that double bottom to fail and become a triple bottom? And then you work through it in that way. One of the things that I like about the V is we can use the RSI Laguerre or the fractal energy, or depending on your broker, it might be called the choppiness index. Gamma, a low gamma after a sharp move to the downside. And where I always demonstrate that is on SPY, since we know where there is a really great example, the pre-Christmas dump back in 2018. So this one right here, very steep, sharp decline, very low gamma. It's a reciprocation trade, 100%. You're looking for the market to come right back up again. If you do that with the RSI side turned on, you are looking for a J-hook signal to the upside with a low gamma, low being below 38. This entire pattern right there, matched with a steep decline like that, is a perfect trade setup, and you can find that on all time frames too. It's one of the few times that we see a very low gamma with a J-hook and actually expect a market move. While we're here, we might as well look at the weeklies. We got to give the market at least 5 minutes for some price discovery. I counseled against running the iron condors this week. The market makers, in their infinite wisdom, gave us a lower volatility than we had last week in the SPX. And I don't feel like we are in a less volatile market this week than we were last week, which means pretty much we're going to outrun this thing. And so I just counseled everybody to not put on the weekly iron condor this week. You can see that right now, today, at this moment, SPY is breaking through the top of its weekly expected move. By the way, if we were in any other conditions, I would be taking that short right there. That would be all the trigger that I would need. But in these times, no thank you, no thank you, no thank you. And you can see when the market gets to that level, it reacts to it. The other levels that you would want to use would be yesterday's high, yesterday's low, yesterday's close, the weekly high, the weekly low, the weekly close for this week and from last week. TPO or volume profile, which are not the same thing. Don't get them mixed up. Johnson & Johnson looks to be finding support at that 151. I know there was a lot of chit-chat on AMD. There's the pullback. Makes perfect sense, right? People are taking profits. It's one of the things that I finally had a breakthrough, by the way, for people who are following along in the TVO series. I bought Jigsaw at Christmas. The first drill is watching order flow. It's passive. It's boring. You can't multitask. I've been doing it forever. Finally had a breakthrough yesterday. Thank goodness. Futures are moving in sync, but the Russell is at the low end of the pivot while everything else is not. The Dow is leading the way. Let's go take a look at what is in the Dow this morning that is moving that sucker so well. 25.5, more money going out, or excuse me, going in than going out. The big movers, UNH, Dow Incorporated, Caterpillar. It'd be easier just to focus on what's moving badly. PG, Travelers, and really? Coca-Cola? That's a surprise. Let's go look at Coca-Cola. Coca-Cola back to support. I would be looking for a reciprocation in this as well, just like this. This support needs to hold for Coke. Jump over and see what you YouTubers have got going on. Welcome, Emmanuel. If you're a member, you could just come on over to the community. Then you wouldn't have the lag. You wouldn't have the time delay. All right, let's see what's going on with the market. Who is driving what this morning? Utilities are really having a rough time of it this morning, and so is consumer discretionary on the household side. If you don't understand why I make that distinction, in the upper right corner is consumer spending on the frivolous side. That'd be your hotels, resorts, cruise lines, and then you've got your consumer spending on the household side of things, the things that you're going to buy no matter what the economy looks like. Right? You're still going to need toilet paper and bourbon, but you might not need that cruise or a trip to Bali World. Upper left, finance looking a little flat. The top three are risk on, the bottom three are risk off, and the middle three are defensive sectors. So when we see a market making a move, we want to go in and try to identify, is the move being done collectively, or is there anything holding us back? One of the few items that I use on that are these 9 sectors, and then looking at the factors, the futures as a group. Take some time to read these as a group, but I promise you that if you do it long enough, you will become very skilled at it, and they do offer trade opportunities. When they move in sync, and they don't always, but when they do, when they start pushing into the same pivots, when they each start presenting the same pullback and the same push, your opportunity to take a trade in SPY, Apple, anything, goes up substantially. Add to that, the NQ just broke the rounding 9,600 with strength behind it. So did the S&P. So did the Dow. The Russell, you can see, is not participating in this move. So we would be looking for these to flag because it doesn't have the Russell on its side. Divergence in the marketplace. Quick jump over to Amazon, completing that little itty bitty tiny cup depending on the time frame that you're on. I have a really, really wide iron condor on this, and yet I don't think it was wide enough. That's at least a 2 standard deviation move outside of the boundaries. Go to the 15th, and we set this for a 1 standard deviation move. There's a 3 standard deviation move. Set that to the charts. Check it out. That's a 3 standard deviation move in Amazon. That's a big move. That is really, really big move. Creed giving a shout out on Dish Network. Come on, Thinkorswim, you can do it. Pushing right into the roundy. $2.19. It's another one with a massive move outside of its weekly expected move. Here's another one where it went way outside of its expected move. So when I had mapped this out the other day, we had this fake out breakout. One way to look at that is that it pulled a Busby. And we've talked about this before. It's a market that is coming into resistance test. This kept testing and testing and testing. It finally broke. So it makes a move up. Pulls back to validate what was resistance. Validates it as support. And then it makes a move in the direction that you were intending to trade. One way that you trade that is that instead of trading the breakout, that you wait for the pullback and then you take your entry. That doesn't normally include such a massive gap like that. And you can look to get in. Come on, Thinkorswim. Turning off my drawing. Ooh, you're frustrating me. You can look to get in after the break there, or you can look to get in after it resolves itself on the bounce. It's more of a personal preference. Some traders want confirmation, and some traders take the trade aggressive. They don't wait for confirmation. Dish is offering pullbacks. So if you can get in not from the highs, that would be a better way to do business. The S&P is back to support. So is the NASDAQ. The Dow, still holding strength, is presenting more of a bull flag. And the Russell broke through its previous pivot and is still dragging across the bottom of its price lane. Got a shout on Facebook. Nice little move this morning. Open range clearly defined. Pivot low. Pivot high. On Facebook, if you look left, you see the previous pivot. Understand why it grabbed support there. And then also look back to the left and realize that 210, 209, you've got a lot of overhead resistance, which is why it hit that spot and pulled back. Just looking at that 10-point drop in the NASDAQ. Be cautious with these monsters, the monsters of tech, with that kind of pullback. Now in this watch list, you can make your own. It's kind of like an ETF on Thinkorswim. You can build your own basket of products. You can see here, this is Facebook, Apple, Microsoft, Google, and Amazon combined. So on one chart, it's like my own homemade ETF, only I didn't make this. And then you can weigh the products. You can adjust them with beta weight so that they're equally represented on one single ticker. And it allows you an opportunity to get a real strong visual on a collection of products. Carol, I did a video on that, and there is a checklist in the room drive. We absolutely can identify trend days a good 85%, maybe 90% of the time. If you go through the checklist, and especially the overnight analysis, so when the market closes, you do analysis, and then when you wake up, you do another one. You build your thesis, you go through the steps. A good 85-90% of the time, you can identify that. So if you grab that and then you hit the video, you'll have a real good understanding of being able to identify trend days before the bell even rings in the morning. It's not always, but it is often enough that you'll get to this point where you'll just know it in your bones. I was watching a video the other day that was talking about traders' intuition and how a lot of what we do just becomes so much a part of intuition more than anything else. I mean, if you think about it, you don't.
If you're like most,
you don't do a lot of what you do. You don't think about it. If the way it was described is, think about a golfer. You could have a guy who's been golfing his whole life. He's out there on the field. He's got a great average. He's just knocking it out. And then you tell him, hey, go and focus specifically on the next swing on your grip. Think about your grip, how you grip, the way that you're holding it, the way your hands move as you're getting ready to take that swing, and then go over there and hit that next hole. They're going to screw up more than likely, because what they were doing was almost second nature, like breathing, and now instead they're trying to focus on something very specific. Here's the trend day video, by the way, from the Bullish Bears YouTube. The Thinkorswim's got a lot of features. Here's a Target Walmart feature. It combines those two markets into one, so you can just kind of get an idea of what's going on, say, in sales. You can make your own sectors, build things up how you wish. Quick glance at USO. We will be watching this during the oil report today. And again, we've got that same pattern that I spoke about Sunday. Deep, strong trend. Base is set. And we're looking for reciprocation. Yep. Brady giving a shout out on Microsoft. I'm in a Microsoft trade, and as long as it holds above 80, my trade will be 100% profitable. Been in it for a while now. It seems to be testing my patience, but the trade is still good. I'm in the 80-75 put spread, so as long as it stays above this, I get to keep 100% profit. GE still working on that range. I think the opportunity is going to be there. Do that a little different. That'll work. Alibaba, we haven't been to Alibaba today. So Alibaba, open range, clearly defined. And then it failed and has broke back inside the range. This support might hold here at that pivot. I would make sure that this is not correlating too strongly before trading it. You see it's in the NASDAQ. Right on. So what you see there in purple is the NDX, the NASDAQ, and the red and green is BABA. They're not moving in sync. What's the beta? So Alibaba's got a 1.8. Now I do have mine set to a fast beta. Think about the exponential moving average versus a simple moving average, right? The simple doesn't weigh the front side at all and just treats every number equally, and an exponential moving average puts more weight into the front averages. Same with fast beta, kind of the same perspective. So for every $1 move in the S&P, Alibaba makes that same $1 move plus another 85 cents. Yeah, it is. You can search for it. Just type in COMP. And you can do that with multiples. So, you could load up more than one. Just be aware that when you do, more often than not, Thinkorswim is going to turn these dollar amounts into percentages if you load more than one of them, because it's going to be benchmarking or comparison of a multitude. I actually have a chart saved with the indexes, or not the indexes, but the sectors all laid over on top of each other. And then you can run them to see which ones are, doing better, say in the last month or in the last year or year to date. And that is not it. Well, there's our sectors again. Might as well take a peek while we're there. Banking is doing really good. So that's my area of, what is the word I'm looking at? That's the place I go to most often. It's something that, we talk about finding something that interests you in trading that sector or that industry. I know a lot of people that focus on weed or the car industry, aerospace, defense, insurance. For me, I really like the finance sector. You've got credit cards, you got banks, digital lending, treasury, bonds, government spending. You've got a lot of different avenues while still being a part of the finance sector. So for me, I like to focus on financials. Well, I don't know about edge, but I know that I trade futures while looking at all four of them. Literally, this is how I trade. So when I trade the ES, I'm looking at these. When I trade the NASDAQ, I'm looking at these. And really, if I trade anything, X steel, I look at these. I don't know necessarily that I would like them on top of each other, but um, there's an indicator called delta, that measures the split between the bid and the ask. And you could try to build some indicator that measures the split between these four when they're pushing into tick or fading off of tick. It's an interesting thought. That pattern is setting up on the Russell. That basing pattern. Pretty much we've got the pull and we're looking for a flag. And the trade comes from a failed flag. There you go. So yeah, Joey's got the right idea too. Cloud stocks, those things are like runaway trains lately. McClintock, another person who is big in our community, and he made a video on his trade strategy. He focuses a lot on insurance and space defense products. You can go over to FinViz and do a lot more in-depth scanning on different sectors, really break things down into unique avenues. Hi, Sean Anderson. I would say welcome and stop by the Bullish Bears community. Sign up for a 14-day trial. That way you can watch these streams without lag. All right, it is 10 o'clock, so I'm going to shut down the YouTube stream. For everybody over here on the YouTube, I will see you in the chat room.